Welcome back to the Dividend Diplomats YouTube channel, everybody. Lanny, Bert, you know us by now, the Dividend Diplomats. Guess what, everybody? We're going to talk to all of you about a Dividend King that's getting pummeled so far in 2022.
Guys, definitely give that subscribe button some love there. Hit that thumbs up. Let's spread the news on dividend investing because we're here to help you on that journey to financial freedom, baby.
Yeah, we're recording this Sunday night, April 17th. Happy Easter, everybody. Happy Passover. Easter Bunny, you know, in that basket, they threw in there some dividend stocks. They threw some potential undervalued, little chocolates, putting the eggs there. Pull open the foil. You got some Dividend Kings to take a look at here. That's what it is all about right there.
You got that right, Bert. Easter Bert, Bunny Bert, depends on what you like to call Bert the Hurt these days. He came in.
I was gonna say they call me Moses Bert here. We're leading all of our YouTube subscribers through the desert for 40 years, everybody. Switching holidays.
Right, guys. we got an undervalued dividend king here to possibly buy. As Bert said, has really dropped the people's elbow on this stock, down almost 25% year to date. Bert, this stock is no wonder why you want to talk about it. And I'm curious if you're going to end up wanting to buy this stock for real.
We'll see. And this is a company here that has frequented our comment section over the last month or so. People have been asking us to perform a stock analysis. We keep putting our watch list together. We keep finding 3 undervalued stocks. We keep buying other dividend stocks. And everybody, every once in a while, trickles in, how about blank company? So you know what? Ran the metrics tonight. I see why people are watching them. I see exactly why people are buying them. That's going to be the question we answer, though, Annie. Am I buying them? Are you buying them? And then are other people here going to be buying them?
Definitely did not expect this to be the video. So I'm excited to dive into who it is, why it's on the radar outside of just getting their butts whooped right now within the stock market. And yes, let's hear your feedback because we want to know if this is a stock that you're buying as well right now. So, Bert, are you ready to release the dividend stock, or do you want to talk about the 3 dividend diplomat stock metrics that we use to evaluate the stock?
Let's talk about that first, because we should tell you how we evaluate all stocks that we are watching, all stocks that we are buying. And it is done with 3 simple metrics and a bonus metric. 1, PE ratio less than the S&P 500. 2, payout ratio less than 60%. 3, history of increasing dividends. We look at that dividend growth rate and how many years in a row the company has increased that dividend. And that bonus metric, that little cherry on top, is the dividend yield. It's like the extra kick that The Rock gives when he's getting ready for the people's elbow.
And he takes it off, throws it out to the crowd because, Bert, what's this dividend stock right now we're talking about?
This company, Stanley Black & Decker, ticker symbol SWK. That's right. This Dividend King is a powerhouse in the power tools, in the tools, and it's a massive all-around company. Some of those brands, all right, Stanley, Black & Decker, DeWalt, Craftsman. There are plenty of other companies when you go to their website that they own. And if you peruse, if you go through Home Depot, you go through Lowe's, you see their brand plastered everywhere. I can tell you, we've been doing a little work in our basement here, trying to put some drywall up, and can tell you, too many trips to Home Depot, and I see this company everywhere. That's why I'm excited to look at them today.
I love it, Bert. I love it. And you're right, though. I mean, they're down 24.53% year to date. The last 52 weeks, dating back to last year, mid-April, they're down actually over 31% for this Dividend King.
Yeah.
And it's a Dividend King, which is why you should be very excited because we're pumped up. We love buying beaten down dividend dogs here in the stock market.
Yeah. And what's causing the stock price to drop? Management's actually been tipping this one off since last October. It's only accelerated over the last few years. They've been talking about increased costs due to supply chain issues and due to expected inflation. Found a quote from October 2021. Those are going to be the major things. In 2021, it cost them $690 million this year potentially up to 650 million in 2022. I want to make sure I had that number right. But remember, everybody, that was in October 2021. Lanny, do you think anybody could have foreseen just how hot inflation was going to get to start the year in 2022?
Maybe not how hot, but possibly, the question is predicting how long the rise and increase of, cost we're going to be. And, if that was October of 2021, we're already still 6 months in, hitting the highest inflation numbers at 8.5%. We should see some cooling off on the next 6 months. But, I don't have that magic 8 ball here. And Stanley Black & Decker is taking the beating for the inflation, increasing cost, as well as any other sort of supply chain disruptions from delays in receiving the pieces and parts that they need to create these high quality tools.
Yeah, and one interesting thing I thought was fascinating. They snuck in last month as the price continues to remain low. Management accelerated a $2 billion share repurchase program. It makes you think maybe management knows that this company is also an undervalued dividend stock to buy there, so that they can lower that share count, increase the EPS there, and take advantage of these low prices and just crush it.
More than likely that could be a great idea and a great option that management has at their hand. I do see where you're going with that. So Bert, Stanley Black & Decker is trading at $140.32 as of the close heading into Good Friday. So what's this first metric look like? The one that really shows if it's undervalued against the market.
Yeah, let's jump into that first metric here. You said it, the price, 140.32. Forward EPS from average analyst earnings, which you would expect the analysts are already building in some of those increased costs due to inflation. Those forward earnings that we're using, $12.02. That gives you a very low PE ratio of 11.67, less than half of the S&P 500.
Tell you what, if that doesn't make you get out of your chair and go buy the latest DeWalt set or your Craftsman toolbox, I don't know what else will. Definitely undervalued against the market right now. I mean, for a Dividend King that's hard to usually come by, I've always found it a hard time to find a good time to buy Stanley Black & Decker. And I like this first metric, Bert. I really do.
Yeah, I couldn't agree more. So let's look at the second metric. And the dividend payout ratio becomes important, especially in a time with rising costs where management's concerned about the impact to the bottom line. This will be a leading indicator of, can the company cover that dividend even if earnings fall? Is your dividend at risk? That's what we are looking for with the payout ratio. That's why we use 60%. Is just that, like, you throw your thumb out in the air and just say, yeah, if it cruises too high above 60%, we're going to have to keep an eye on a future dividend cut. Stanley Black & Decker's dividend is $3.16. Divide that by the $12.02 EPS. That gives you a payout ratio of 26%.
Even if EPS was cut in half, this dividend would still be safe. And, Bert, 26% dividend payout ratio. Not only do you have a safe dividend, but man, Stanley Black & Decker is keeping plenty of tools in the shed to continue to increase that dividend.
Yeah. So let's move into that third metric here. Dividend growth history. We talked about it. They're a Dividend King. They've increased that dividend for 54 consecutive years. Hey, not the first time they've seen good. They've managed to increase that dividend through bad economic cycles as well. 5-year average dividend growth rate is 6.07%. Interestingly, last July, Stanley Black & Decker announced a 12.9% increase to the dividend, well above that 5-year average.
54 years, check. Last dividend increase was almost 2 times the 5-year average growth rate of 6%, growing it at 11% last year. That's fire right there, guys. Guys, give us this video a thumbs up right now if you're down with Stanley Black & Decker. With that, again, I know that they keep predicting these increases in costs, but with the low payout ratio where it is, one would only have to expect a high dividend growth this year. Again, I would say still north of 6%.
Yeah, I agree. Couldn't agree more. They have the room to keep increasing that dividend. So it's an excellent point. Let's look at that bonus metric, that dividend yield. Currently, with that $3.16 dividend, that gives you a 2.25% dividend yield. Not the highest, but it is a very strong premium to the S&P 500's dividend yield.
Hey, you buy another Dividend King that's around 2.4 to 2.5% J&J. Is Stanley Black & Decker doing one of these?
It could be. It could be. So let's summarize them here before we get into our final thought about Stanley Black & Decker. PE ratio 11.67, payout ratio 26%, 5-year dividend growth rate 6.07%. They've increased that dividend for 54 years. They're a dividend king, and their yield is 2.25%.
Passes all the metrics. I think a lot of people are going to get hung up on the dividend yield, but if they continue to grow their dividend at an above inflation rate, hopefully above 8.5% this year, can't really knock Stanley Black & Decker. And again, we're only 90 days away from their expected increase month in July, right, Bert?
Yeah, no, you're absolutely right. That's why we always save the yield, though, for the end. I think you brought up a great point there. People, you shouldn't get hung up on the dividend yield. You shouldn't go chasing the yield. You should go be looking for companies that are great dividend growth stocks that are going to meet the metrics of your portfolio. That's why we run them through the screener, and we don't look at the yield until we get through the first three.
I mean, that's why Bert, when he's in the shower, he's just saying, don't go chasing dividends. So you really got to think about it, right?
Yeah, you do. And I mean, honestly, came in here asking, what am I doing with Stanley Black & Decker?
What are you doing, Bert?
I mean, it is just shooting up my watch list. It's going to be very hard for me not to buy this week. I'm just going to be blunt with you. By the end of the week, I would expect you at least to have some portion of SWK because, I mean, the metrics look great. To your point, it's hard to find a Dividend King that is this undervalued, that strong a brand, that low of a payout ratio, and that long of a history increasing dividends. Again, I'm liking what I am seeing here for Stanley Black.
Bert's looking and he's a liking.
That's right.
I know you just initiated a position in Cummins as well recently, right?
You're right, Lanny. By the time this video launches, I'm going to have purchased my first share of Cummins. I want to start building that position at too. So you know what? Maybe in the short term, in addition to Johnson & Johnson, I don't know, maybe getting one share of Cummins and or one share of Stanley Black & Decker every week is not a bad recipe.
I mean, Stanley is, a little bit lower in share price right now than both Cummins and J&J. It's hard when you're a dividend investor looking to build this passive income stream and to reach that financial freedom standpoint with a yield of 2.23%. But you're looking, Bert's not looking at just 1 day out, 1 week out, 1 year, 5 years, 10 years. He's looking at, hey, can I own this stock for my lifetime? And then can this be passed on to that generational wealth? So I think this is a perfect stock for that. Similar to Bert climbing up your watch list, this one is also barking up my list as well. I know I still have my dividend stocks I've been buying all month of April. Check that video out if you haven't already. It was released a couple weeks ago. So this one is right there, fits the metrics, and it's a Dividend King.
Yeah. So everyone, let us know what you think of Stanley Black & Decker. Are you buying? Are you watching? Let us know in the comment section below. Obviously, for all the people that wanted us to do a Stanley Black & Decker video, now that we did it, what other dividend stocks do you want us to analyze? Do you want to put back to that list? There are a lot of great Dividend Kings and dividend aristocrats that are trading at cheap valuations right now. Let us know what you want us to look at so we can start pumping out some videos for them.
So guys, Stanley Black & Decker, dividend stock to buy now. Let us know. If you haven't already, definitely like the video. Give this channel a nice subscription. That was Bert and Lanny from the Dividend Diplomats. Over and out.